Things Money with David Blain, a discussion about your money, including everything from investing and taxes to real estate. Now with this week's program from D.L. Blain Company in New Bern, here's David Blain.
Hello and welcome to All Things Money. My name is David Blain, and on today's show we're going to give you an outlook for the year 2011. Believe it or not, it's right around the corner. And as I sit here this week, which is Christmas week, I want to wish you and your family a very Merry Christmas. And if you don't celebrate Christmas, well, enjoy the week anyway and have a Happy New Year. So this time of year, it seems like everybody, all the prognosticators and newspapers and magazines, everybody has a year-end predictions for the following year. So we generally do this as well. Try to give our clients and viewers and listeners an idea of what's going to happen for next year. Obviously, we don't know, but it always helps if you have a roadmap, even if it happens to be wrong in the future. At least you know where to start out or what direction to start out. So before we get into our 2011 outlook, let me just give our contact information as always. If you'd like to get a hold of us on the show, if you have any comments or questions about the content of the show, anything that we covered, or a topic you'd like to see or listen to on a future show, our phone number is 252-633-0107. Our email is allthingsmoney@dlblain.com. That's allthingsmoney@dlblain.com. And of course, you can visit us on the web at www.dlblain.com. There you'll find information about myself, my firm, as well as archived copies of the show. So without further ado, let's get into the 2011 outlook. What I'm going to do today is I'm going to give a broad overview, start with a broad overview with various outlook for the markets, the stock market, bond market, inflation, the economy. Then we'll go back and we'll get more detail. That way I at least get the broad overview covered for everyone if we run out of time. There's a lot to cover here, so let's get started. We'll start with the stock market. On a global basis, the world stock market, the economies are continuing to recover. Most indicators are positive for economic recovery and the avoidance of a double dip. We look overall to have the global uptrend continue through the first part of the year. We are looking for a downturn beginning maybe at the end of the summer, somewhere in the second, third quarter of the year. During the first half, we do expect that emerging markets will continue to outperform the rest of the world. China, Brazil, India, Russia, which are the big four emerging markets. Certainly Brazil and China have taken somewhat of a breather in 2011. But there are plenty of other emerging choices out there. The rest of Latin America has been doing very well. So we'll get into some of those. But broad-based emerging markets outperformance. And then the second half, we're looking for broad-based weakness across the globe. As far as the U.S., kind of the similar story, uptrend into mid-year and then weakness beyond. We look at the first half of the year, upside target on the S&P 500, somewhere in the 1540, 1580 range. We think that the downside risk at a minimum will be somewhere around the 1215, 1250, somewhere in there. As far as the market cap allocations, we look for the small caps to lead in the first half of the year, and then the leadership of the market shift over to large caps. That's very typical for a bear market, is to have that shift from the smaller companies over to the larger, more established companies. Styles, a lot of this is going to depend obviously on the growth and the economy, but we think at least for the first half of the year that your growth type stocks are going to outperform your value type stocks. The second half of the year during the market downturn, it'll be more of a mixed bag. So some of the themes that we think will be, along with that large reasserting itself in the second half of the year, that dividend payers will begin to reassert themselves in the second half of the year. Typically, in bull markets, people forget about dividends, and those companies aren't given very much of a premium for the dividend paying that they do. But in bear markets, those dividends become a premium to investors. And so we think that the second half of the year, your dividend payers and companies that are growing their dividends will be the ones that, at least on a relative basis, are able to outperform. They still may be declining, but just not as much. So in terms of sectors, kind of the same thing. We view the first half of the year as cyclical sectors outperform, things like materials, energy, things like that. The second half of the year, we feel like things like utilities, consumer staples, your more conservative, stodgy, old-fashioned type companies are going to outperform. Narrowing it down a little bit into the industry and group level, we feel like in the first half of the year that your coals, metals, mining, those type of stocks and those companies and those type of industries will be outperforming. In the second half of the year, we do look for, in the commodity space, for refiners and gold miners to lead the way. In the consumer area, we think that your consumer things like broadcasting, advertising, things like that, we're going to outperform. In the second half of the year, moving back to more of the staples, things like restaurants and food products. In the technology arena, we look for semiconductors, both equipment and manufacturers to outperform in the first half of the year. And then as we move into the second half of the year in the technology arena, software and services will outperform. So that's kind of the outlook for the market. We'll get into more detail in the next few segments, but generally we look for strong performance, really more of what we had in 2010 through the first half of 2011, and then in 2011 in the second half we anticipate some broad-based market weakness. As far as the economy itself, we put it into the category of moderate growth. We would expect mid 3% GDP growth for 2011, probably tapering off down to low threes in the second half of the year. We view inflation still as low. We would look for in the maybe 1.25, 1.25% in the first half of the year. Moving on to the second half of the year, we would expect inflation to move up past 1.5% on into at least 1.75% inflation rate. So that's kind of what we view in the economy is still growing, but growth moderating in the second half of next year as the bull market runs out of steam. So we're going to take a quick break here, and then we'll come back with more of our 2011 outlook. For All Things Money, my name is David Blain.